In the last video I did for you, I introduced credit transactions. Credit transactions deals with buying or selling now and paying later. So if you buy on credit, it means you buy the stuff now, you pay back later. If you sell on credit, you sell the stuff to your customer and they come in and they pay you later. We have two new terms here that you need to be aware of. Debtors, those are people that owe money to the business. So anyone that buys on credit from you owes money to you. Now there are three possible transactions you can have here. The first one is if you sell on credit. In other words, you sell to the person, they don't pay you immediately. When you do that, you give them an invoice, and the journal that we're going to use for that is called the debtors journal, which we abbreviate to DJ. If something's wrong with the stock that we've sold to the debtor, they can return stuff to us. If that is the case, we're going to issue a credit note, and the journal that we're going to use here is Debtors Allowances Journal, or abbreviated DAJ. Now at some stage the debtors are going to come and pay the account. It's only at this stage that money is going to be involved. So when they come and pay the account, you give them a receipt, and that is when you record credit transactions in the CRJ, only when they pay back. Then creditors are the businesses that we owe money to. So we could buy on credit. If we do that, we're going to receive an invoice, and the journal used for that is called the Creditors Journal, abbreviated to CJ. If we return anything to a creditor, or they've given us an allowance, maybe they overcharged us, we're going to issue a debit note, and once they agree with our claim, they're going to give us a credit note. And then we're going to record that transaction in the Creditors Allowances Journal, your CAJ. It is only when we pay back our creditor that money is involved. We're going to make an EFT payment to pay back our creditors, and that is when you're going to record in the Cash Payments Journal. What I'm going to do now is go through a worked example on this. Alright, so you've given a summary of transactions, and then they give you the journals. And I just want to remind you quickly before we start what we use each journal for. So the cash receipts journal is used if you receive money. You'll notice that there's a new column in your cash receipts journal now called debtors control. That column is used if debtors pay you back. So we sold on credit to them at a previous date, and now they're coming and paying us back. The cash payments journal is when you pay money. There's a new column here as well called Creditors Control, and that is used when we pay back money that we owed. Then we have the Creditors Journal, which means we've bought on credit. We have the Creditors Allowances Journal if the business returns to suppliers. We have the Debtors Journal if you sell on credit, and you have the Debtors Allowances Journal if customers return stock to the business. Now when you're doing these activities, I strongly recommend that you read through the transactions and enter straight away into the relevant journal. Don't read them through and decide on which journal to use first, and then have to go back and reread everything to figure out what you need to record. It's much better to read the transaction, decide where it goes, and make the entry straight away. Alright, so the first one says we purchased stock 25,000 Rand, less 10% trade discount, stationery for office use, and stationery for Joseph's personal use. And it says there on credit. So we're not paying for that yet, so it's going to go into your creditors journal. In your creditors journal, the stock we bought cost 25,000 Rand, but you got a 10% discount. Now the quickest way to calculate this amount is to say, if I got 10% discount, means I bought for 90% of that. So you take 25,000 and you multiply by 90%. The stationery for office use goes under stationery, but the stationery for the owner's use is going to get recorded in drawings. Now those three amounts added together will give you the total that we owe General Stores on that day. Right, moving on. Paid Apex by EFT 5,000 Rand for stock purchase on credit in March and to buy further stock. We are now in April. If we bought that stock on credit in March, we are now paying that back. Both of these involve spending money, so you're going to record in your cash payments journal. The stock that we purchased that last month that we're paying back gets recorded in the creditors control accounts. The further stock that we're buying is trading stock, and you made one EFT payment for the total, which is 6,200. On the 3rd, you used internet banking to pay 4,200 Rand to Metro. 3/4 was for water and electricity for the business, and 1/4 was for the owner's personal electricity. Okay, we're using internet banking to pay money, so that's going to get recorded in the cash payments journal. The total you paid there was 4,200. 3/4 was for water and electricity, and 1/4 was for the owner's personal electricity, which is regarded as drawings. So to calculate those amounts, divide by 4 to get drawings, divide by 4 and times by 3 because it's 3/4 to get the water and electricity. Okay, the next one, sold stock for cash and on credit. Right, let's start with the cash first. If you sell stock for cash, you're going to receive money. So in your cash receipts journal, the day there is the 4th, your details here is sales, that money came into the business. Now you'll notice I haven't recorded in bank yet, and the reason for that is because I've got additional transactions on this day. The selling price was 41,000 and the cost price was 20,000. And then if we look at the stock that we sold on credit to Mr. Peter, we're not receiving money straight away for that. So that's going to get recorded in your debtors journal. So the person that owes you the money is Mr. Peters, 1,900 for debtors control and sales, and cost of sales will be 950. Okay, the next one. Received 3,300 Rand from Mr. Paul in part payment of his accounts. So he's actually paying us back now. So at this point we're receiving money. The person giving us the money is Mr. Paul. The money came into the business. And the column that you use when people pay back is your debtors control column here. So this column here is only used when people are paying you back, when you actually receive money from them. And then one more on the 4th, we receive rent from Mr. Malcolm, who makes use of one of the storerooms. The rent for March was 2,500, but the rent for April is 8% higher than this. So to get your amount, you're going to add 8% of this to the 2,500. The cash receipts journal is going to be involved here as well, and that money came in the business. Now can you see all of these transactions are on the same day? So we record them all under analysis, and then we only go to the bank at the end of the day with the total amount received on that day. That's why these individual amounts here are not recorded separately, because you only go to the bank once a day. To get this amount here, as I told you, you can work out 8% of 2,500, or you can, and then add it on rather, or you can just do this. The 2,500 represents 100, and you want the next one to be 100 plus 8, which is 108. So divide by what you're given, which is 100, and times by what you want, which is 108. That's a shortcut method. Okay, the next one, purchase equipment for 6,000 Rand. This will be paid for during May. That means we have bought on credit, which means we haven't paid yet. So in your creditors journal, we're buying from Banger Traders for 6,000. There's no equipment column here. That's when you use sundry accounts and you write the word equipment. Don't forget that whenever you don't have a special column for something, you have to use sundry accounts and write the name of the actual ledger account that's affected, in this case equipment. Okay, then the next one. Some of the stock sold on credit to Mr. Peter was the wrong size and he returned it. The stock had been sold to him for 700 Rand, cost price 450. So your debtor is now returning stuff to the business. So that's going to get recorded in your debtors allowances journal. You have a column for debtors control, debtors allowances is a new column for you now, and then cost of sales. So that stuff is being returned to the business, so that's why it goes in the DHA. Okay, then the next one, sold stock on credit to Mr. James. This had cost the business 800, so they're giving you your cost of sales figure here, and the markup's 85%. So to calculate the amount here, you're going to take the 800 and you're going to multiply it by 108 over 100, and that's going to give you 1,480, which is your sales amount. Right, moving on. Paid 15,000 Rand to Nedbank to pay a loan, and this amount includes interest of 1,500. So if you take 15,000 minus 1,500, you get 13,500. You are paying money. 13,500 is for the loan, 1,500 is for interest on loan, and you're making one payment, so you report the total here. You cannot just write 15,000 loan and interest on loan. If you do that, you won't know how much to put into the loan and how much to put into the interest on loan when you do the ledger. So you have to separate those. Then we return damaged stock and stationery, which had originally been purchased on credit from Mango Dealers last month. This is when you make use of the creditors allowances journal. Okay, we're returning stock and stationery, so the total of our returns there is 5,180. A debtor, Mr. Jacob, had been overcharged on stock sold on credit to him in February and was thus granted an allowance of 220. So we're giving a debtor an allowance, so it's going to go in your debtor's allowances journal. Please note here that the debtor is not returning stock, so you're not going to have a cost of sales figure because no stock has been returned. You're just going to have the allowance of 220. So in this one, stock was returned, so you reported cost of sales. In this one, there was no stock returned, so that's why that's 0. And then the last one here, received a credit note from Bangor Traders for equipment returned which had cost 350. If we receive a credit note, means we have returned. If we return, it's going to go into your creditors allowances journal. Bangor Traders, we're returning stock, and the total here is 350. So in the next video that I do, I'm going to move on to posting to the general ledger, and then also introduce to you debtors ledger and creditors ledger. But for the time being, that's all. Thank you.